Good evening. Thanks for joining us on Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening: the Sensex and the Nifty end in the red for the fourth day. Mid-caps buck the trend. The rupee regains some lost ground against the dollar but remains above the 90 mark. Shares of asset management companies rally after SEBI's mutual fund cost overhaul were less stringent than expected. Brokerage fee also cut by half. The street does not expect any major hit to profitability of AMCs. The Lok Sabha passes the new legislation to overhaul the Rural Employment Guarantee Scheme and opposition parties protest. The bill increases the number of workdays to 125, but states will need to share 40% of the overall cost. The government agrees to refer the Securities Market Code Bill to a parliamentary panel. The bill seeks to rationalize four existing legislations governing SEBI, depositories and government securities into one single code. The opposition says the bill is against the principle of separation of powers. The Competition Commission of India launches a probe into Indigo after the mass cancellations of flights earlier this month. This comes on a day when the Indigo CEO told staff that the worst is behind the company. The airline is back to operating 2,200 flights a day. Ola Electric shares hit a record low. The founder and CEO Bhavish Agarwal dilutes his stake worth 234 crore rupees in 2 days. The company called it a planned one-time sale to settle promoter debt worth 260 crore rupees. Mutual funds have been reducing their stake in Ola for more than a year, but the retail investor holding has doubled in the same period. India and Oman sign a free trade agreement. The Prime Minister calls it a major step in deepening ties with the Gulf region. India's annual exports to Oman stand at nearly $4 billion. The government's top auditor issues a warning on direct benefit transfer schemes. The CAG says thousands of crores are flowing into beneficiary accounts without mandatory checks, blames weak data integration and government departments working in silos. The air quality in Delhi remains hazardous even as strict pollution control measures take effect. The pollution levels in adjoining cities like Faridabad, Noida and Gurugram worse than Delhi and 30 times above standard levels. President Trump defends his handling of the economy and the tariff onslaught, announces a new warrior dividend for active military personnel and claims it will be paid with revenue from tariffs. Well, let's start with the day's market action. The Sensex and the Nifty declined for the fourth day, but the losses were marginal at close. The mid-caps did, of course, manage to outperform the blue chips with the index ending in the green. So the mid-cap index up 200 points, Nifty flat, the Sensex as flat as it can be, and so similar story playing out for the Nifty Bank. But from the equity market to the currency market, the rupee has regained some lost ground against the dollar, but it remains above the 90 mark. It is the worst performing currency in Asia. Foreign fund outflows and uncertainty over the US trade deal continue to weigh on sentiment. 90.24 is the dollar rupee. In the commodity market, crude oil prices increased after President Trump's blockade of sanctioned tankers coming in and out of Venezuela. Oil prices rose over the $60 barrel mark after nearing four-year lows in the previous session. Traders are keenly watching for a potential peace agreement in Ukraine, which is expected to bring Russian crude supply back to the market. Bitcoin prices surging surprisingly, in fact, nearly $3,000 in just 1 hour, reclaiming the $90,000 mark before profit booking pulled prices down to $86,900 within minutes. Now, this rapid move triggered $200 million in long liquidations within an hour, shaking the broader crypto market and pushing most major tokens lower. The volatility has revived near-term downside risks for the sector, so extremely sharp moves being seen there in the crypto market. Stocks of asset management companies rallying in trade after the market regulator SEBI revised the total expense ratios for mutual funds by excluding statutory dues from the equation. Sonal is standing by with what brokerages make of the move and how this is likely to impact the industry. Sonal, less severe than what the industry was bracing itself for?
Well, that's right. The final total expense ratio slabs which are announced by SEBI have coming as a relief because the cut is lower than what was proposed in the consultation paper in the month of October. In fact, if we take you through the numbers, excluding brokerage, these slabs are actually 5 basis points higher than what was proposed in the consultation paper. Brokerage expense ratios, they are now cut by 10 basis points. The expectation was that they could be cut by 15 basis points. So this has come in as a relief for the AMC industry and for brokers as well. well. But what are brokerages making of this move? They say this is largely neutral to positive for AMCs and brokers as well, because the market was fearing there could be a bigger cut in total expense ratio. For instance, Morgan Stanley says there is a relief which has come in terms of GST and commissions, which was estimated at 11 to 12 basis points, but the final number gives a relief of around 1 to 2 basis points. This particular relief offsets the 5 basis points impact from exit load removal, and this would mean a 3 to 3.5 basis points impact on large AMCs. But yes, it will not have a big impact on their profitability. AMCs are expected to pass through 60 to 70% of the impact to distributors, so the net impact could be even lower to around 1 to 1.5 basis points. This will equal to around 4% of their operating profit and around 3.5% of their FY25 profit before tax, but not as big as the industry was fearing earlier. Jeffrey says this is a relief versus what was expected. The 5 basis points exit load cut on equity AUM that remains now, this is a relief as well. Brokerage cap has been reduced to 6 basis points, excluding levies, versus proposed 2 basis points. So that is also something that the street seems to like. But the net impact of changes are expected at around 3 to 5 basis points of equity AUM, and AMCs may partially share it across the ecosystem, something like distributors. So it could be more negative for the distributors than AMCs itself. Overall, their view remains positive for AMCs, brokers, and RTAs as well.
No, I think it will adversely impact both the funds and the brokers as well. And again, you know, obviously mutual funds can't, even the large mutual funds can't hire the kind of analysts which many of the brokers have. You know, you have people who spend their entire lives just looking at infrastructure or just looking at transport industries. You know, if mutual funds start hiring those kind of specialists, you know, they'd have a research team of 100 people.
Well, the reactions there coming into SEBI's decision. Now all the action from Parliament. The government has agreed to refer the Securities Market Code Bill to a parliamentary panel. The bill seeks to rationalise 4 existing legislations governing SEBI, depositories and government securities into a single code. Opposition parties say the bill is against the principle of separation of powers. The Finance Minister said the bill will be referred to a standing committee for further vetting.
Gone through in detail the points which the members who are opposing the introduction of the bill. I think instead of going into details of each one of the objections, I would like to highlight the point that at this stage of introduction, we are only making the bill to be sent over to the standing committee to do a complete review of it, the bill.
Well, that's the Finance Minister. Now, the government did not relent to the opposition's demands to send the bill to overhaul the Rural Employment Guarantee Scheme to a parliamentary panel. The Lok Sabha passed the bill today amidst opposition protests. Copies of the bill were torn on the floor of the Parliament, and the House was adjourned immediately after the bill's passage. The new bill, the Viksit Bharat Guarantee for Rozgar and Ajivika Mission Gramin, mandates an increase in guaranteed employment days to 125 days from the current 100 days. The legislation also proposes a higher financial burden for most state governments. At present, the centre bears 100% of unskilled labour costs and 75% of material costs. Under the new framework, 40% of the total costs will be borne by all major states. The bill also seeks to alter the process of budget allocation. The central government will provide a fixed allocation, and states will lose the flexibility that they currently have to propose budgets based on anticipated demand. Opposition lawmakers have also questioned the decision of the government to rename the bill by dropping Mahatma Gandhi's name. Air quality in Delhi remains hazardous even as the strict pollution control measures come into effect starting today. Petrol pumps will not be able to supply fuel to any vehicles that do not comply with the BS4 standard or above. 50% of government staff are working from home. Primary schools have switched to online classes. The pollution levels in adjoining cities like Faridabad, Noida and Gurugram far worse than Delhi and 30 times above standard levels. The Parliament was scheduled to debate air pollution today, but the Lok Sabha was adjourned after the bill to overhaul the MGNREGA was passed. Now, Indigo is facing a probe from the Competition Commission of India following the mass cancellations of flights earlier this month. The CCI will probe the complaint against the airline after the recent disruptions. Indigo commands an over 60% market share when it comes to air traffic in India. The CCI says its probe will be in accordance with the Competition Act. Now, this comes on a day when the Indigo CEO told employees that the worst is behind the company. Peter Elbers also said that operations had stabilized and that 2,200 daily flights have now been restored.
What we witnessed seems a compounding effect of several factors. Everyone wants answers. Speculations are circulating, but I encourage everyone, please stay calm, focus on your professional responsibilities and avoid engaging in such speculations. We need a full-scale analysis.
Indigo CEO Peter Elbers has reached out to the employees after the airline's recent operational disruptions, saying that the worst is behind them. He has urged staff to avoid speculation, stay focused on professional responsibilities, and said that the leadership team will travel across the network to meet teams on the ground, hear feedback, and assess challenges firsthand. Now, this message comes at a defining moment for the airline. According to DGCA data, Indigo has overtaken the Air India group in terms of international passenger traffic. In the July to September 2025 quarter, Indigo carried around 41.4 lakh international passengers, marginally ahead of Air India group's 41 lakh passengers. In the January to March quarter, remember, Air India group was firmly in the lead, flying 45.5 lakh passengers compared to Indigo's 39.3 lakh. That gap narrowed in April to June, and by July to September, Indigo has moved ahead of the Air India group. This shift also follows the June 12th crash of Air India flight AI-171, after which Air India cut international capacity by around 15%, particularly on long-haul routes, amid safety reviews and a brief dip in passenger confidence. Indigo, meanwhile, maintained capacity and frequencies on key international routes, allowing it to capture a larger share of the traffic. Now, even now, Air India Group operates a wider international network, 48 overseas destinations versus Indigo's 44. But let's see if Indigo is able to sustain the lead.
Shivani, many thanks for joining us. Ola Electric shares hitting a new low after its founder and CEO Bhavish Aggarwal sold shares for 2 straight sessions. Aggarwal diluted stake worth 234 crore rupees with the firm, calling it a planned one-time sale to settle promoter debt. While mutual funds have been reducing stake in Ola for over a year, retail investors' holding has in fact doubled. Hormuz is standing by with the details. Hormuz, the stock hitting a record low.
Another day, another low for Ola Electric, and the price action over the last 3 days would tell you that something was brewing, because the stock was down almost 8% on Monday, fell another 4.5% yesterday, and then another 5% in today's trade as well. Now, what has happened is, now from the IPO price, the stock is down over 55%, and from the post-listing high, which is 157 rupees, the stock is down almost 80% from those levels. Now, what had happened yesterday was the fact that Bhavish Aggarwal's announcement of selling another 4 crore shares. This was in addition to the 2+ crore shares that he had sold on Tuesday as well. So that took the count to around 7 crore shares worth almost 234 crore rupees. What Ola Electric said in its earlier statement, that it was a planned one-time sale to reduce promoter debt, and the overhang of pledged shares would be over after this. And what sources are now saying is that this was intended to be done in tranches and not in one single block. Now, it's been 5 quarters since Ola Electric has been listed, and in those 5 quarters, 5 full quarters at least, the returns have been negative in 4 of them, including the stock almost halving in this very quarter itself. Now, if you take a look at the September 24 shareholding pattern, the number of retail shareholders was around 14 lakh with almost 8% stake. That number as of September this year is 19 lakh shares with almost 17% stake in the company. Now, for mutual funds, they have been reducing their stake over the last 3 quarters, barring this one where they increased their stake from just over 2.5% to over 5.5%. A couple of prominent names being part of this as well. So the next big trigger for Ola Electric now emerges is whether there is any further sale that comes in from Bhavish Aggarwal. The 3rd quarter results will be important to watch, because the company has already cut its revenue and margin guidance for the full year. So it promises to be a bumpy ride ahead for Ola Electric.
Well, many thanks, Hormuz, for joining us. That's Ola Electric. Now, shares of Sun Pharma down in trade after a setback from the U.S. drug regulator. The U.S. FDA has classified the company's plant in Gujarat as official action indicated. U.S. officials had inspected the plant in September, and it is one of the most important facilities for Sun Pharma to manufacture complex generics. The Ministry of Corporate Affairs has ordered a serious fraud investigation of its probe into IndusInd Bank. Sources say the investigation follows concerns flagged by the bank's auditors and the RBI, and it's linked to a derivatives reporting matter. The SFIO order was issued on the 12th of December with no details yet on the scope or the timeline. The CEO of IT major TCS says the company expects $1.5 billion in revenue through artificial intelligence this year. Kriti Vasan also said that AI projects accounted for nearly 5% of overall revenues. This is the first time TCS has reported its AI revenue, so that's a new one coming in. Remember, HCL Tech was the first to give a breakup of AI revenue. A week after a bumper debut, and Meesho's market cap has already crossed the 1 lakh crore rupee mark. Now, this makes the e-commerce giant more valuable than companies like Jindal Steel, Indian Hotels and United Spirits. The stock did see some profit booking today after touching fresh highs. The stock has more than doubled from its IPO price and is 45% higher from its listing price. Manglam joins us now. Manglam, take us through the key reasons for this kind of a runaway performance there for Meesho.
Well, it's a big move that we've seen on Meesho. In fact, just as we speak, the stock is up nearly 10%. 6 continuous days of a big move that we've seen on Meesho. There are multiple reasons why the stock saw a rally as well. The first part, obviously, post-listing, there were a lot of institutions that did not get allocation in the anchor book. The issue was fairly well subscribed. So those guys went ahead and bought. Secondly, there were a couple of brokerage notes that came by as well. And third, most important, there was very limited float available for the counters. So as a result of which, the impact price or impact cost was a lot more. Just to put things into perspective, and these numbers change as we speak. The stock from its issue price has rallied a whopping 115%. And, we look at it post-listing as well. It listed at around 162, 162.5. If you look at it from there as well, the stock has seen a rally of nearly 45%. It's just 5 or 6 trading sessions. At IPO, the valuations were close to 5 times sales. Now it's moved all the way up to 11.5 times sales. The management has been speaking about generating and growing their free cash flow while improving contribution margins. But at some point, valuations will come to the fore because at the current market cap, upwards of 1 lakh crore, it's well above names like Jindal Steel, Indian Hotels, United Spirits, some companies like Havells and Dabur as well. For perspective, Meesho is a company that was founded just about 10 years ago and now has a market cap much above all these big listed companies too.
Manglam, many thanks. The government's top auditor issues a warning on the direct benefit transfer schemes. The CAG says thousands of crores are flowing into beneficiary accounts without the mandatory checks. That and more when we return. The government's top auditor has issued a warning on direct benefit transfer schemes. Speaking at an event in Nagpur, the Controller and Auditor General said thousands of crores are flowing into beneficiary accounts without the mandatory checks. He blamed weak data integration and government departments working in silos for the reason. Let's take a look.
There is a huge gap. We are saying that they're all Aadhaar-based linked beneficiary transfers. But the amount of deduplication or the amount of cross-database verifications that are mandated by the regular regulations of the DPT mission are still wanting. And there are thousands of crores going around into the system without these basic checks.
Well, that is the CAG on DBT accounts. The big news coming in from FTAs. India and Oman have signed a free trade agreement. Prime Minister Modi and the Sultan of Oman signed the deal in Muscat today. Prime Minister Modi, terming the deal as historic, said it will deepen the relationship with the Gulf region. India's annual exports to Oman stand at nearly $4 billion. The deal hopes to increase the export by 50% in the next 3 years. Government sources say this pact would act as a template for FTA talks with other Gulf countries. The prices of petrochemicals, dates, decorative marble and frankincense are set to get cheaper. However, gold, silver, bullion, along with petroleum products and non-ferrous metals have been kept out of the FTA. Here's the Prime Minister.
आज हम एक ऐसा ऐतिहासिक निर्णय ले रहे हैं जिसकी गूंज आने वाले कई दशकों तक सुनाई देगी। कॉम्प्रिहेंसिव इकोनॉमिक पार्टनरशिप एग्रीमेंट यानी सीपा हमारी पार्टनरशिप को 21st सेंचुरी में नया विश्वास, नई ऊर्जा से भर देगा। ये हमारे साझा भविष्य का ब्लूप्रिंट है।
Well, that is the Prime Minister on the India-Oman FTA. And before we wrap, after a whirlwind India tour of 4 cities in 3 days, football legend Lionel Messi and his Inter-Miami teammates Suarez and DePaul visited Vantara in Gujarat's Jamnagar. We leave you with images of Messi and his teammates spending their time at the Anant Ambani-led Wildlife Rescue Rehabilitation and Conservation Centre. From all of us here for now, many thanks for watching.